Hello and welcome. You're watching the weekly edition of Your Trades on ET Now. This is Priyanka Uppal. Along with me is Ankita. Ankita, many highlights to this week, what you call it. Nifty, we've hit 4 months low this week. We've slipped nearly 500 points on Nifty. Bank Nifty, Sensex, they saw bigger damage of losing more than 3% in this week. Nifty did slip below 200 DMA on intraday basis this week, though we did not close about around that level. But then market cap erosion of over 23 lakh crore, what we saw in this 5 sessions only. VIX was over 27% up ever since 27 September, the kind of record levels from which the levels we've seen. FIIs have sold nearly 27,000 crore so far in November month. On the contrary, if you look at US markets, they are on an upsurge. Dow is up nearly 4%. Nasdaq is 5.5% up. In fact, US has been the relatively best performing market so far, but India has seen the severe damage this week coming in. So many sectors have seen a hit. Pharma, metal, Nifty Bank, they've hit 2-month low. Reality, energy, auto, they've seen a 5-month low hit coming in. And FMCG, which is supposed to be the defensive pack, that has taken a hit of 4-month low, and this is all purely on the basis of the lackluster earnings, the earning momentum which has started to slow down, margin pressure. This is what is weighing on the market.
Absolutely, you've given the roundup of the week, Priyanka. But tell you what, let's connect with our guests now who have joined us. Sudip Bandopadhyay, who's the Group Chairman of Inditrade Capital, who's joining us, and we are also joined by Nilesh Jain. Hi, gentlemen. Thank you so much for taking the time out and joining us today. I'll come to you first, Sudip. This week Nifty saw a massive blowout. In fact, we hit our 4-month low. Is this a bear grip? The earnings have been weak. The outlook has been weak. The FIIs are net seller. In fact, we have sold more than 1.5 lakh crores, since from September 27th. Is there any ray of hope now, or what can provide a sigh of relief for the markets?
Well, what you're saying is absolutely right. We have seen massive selling by FIIs, and that's on the back of the fact that US market has become very positive, and a lot of money is moving back to US. The China trade is I think minuscule. Sell India, buy China is a minuscule part of the overall movement of money out of India. The maximum amount of money is going back to US because US has become very attractive. Post the election of Donald Trump, I think the bullish bet on US market has increased. Now, question is, your question is what will change things in India? I think what will change things in India is expectation of a better Q3, which should start building. Some of the commentaries of management in different segments are coming positive, and that should provide a ray of hope. Like Eicher Motors today came up with a fantastic commentary in spite of the results not being good. Bharat Forge came with a good commentary today, and some of the other companies are also coming with good commentary. So that should enthuse the market. And more importantly, I think the US tariff announcements, which should start coming, because very clearly there is going to be a differentiated tariff between China and India. And China will be having a much higher tariff vis-a-vis India. That is the expectation. And as and when that is clearly articulated, I think Indian companies and Indian businesses will get enthused on the back of exciting prospects of doing business in the US. We'll have to wait and watch. Things will play out. Also, we will have to watch the festival season sales numbers, which will start coming in post the closure of this month. And we believe that those numbers should be good because we have seen consumption demand pick up during the festival season.
All right, of course. That's a roundup of the kind of earning that we've seen, Sudip. Sudip, please be with us. Nilesh is also joining us to talk on the technical levels, what we saw in this week. Nilesh, clearly, we did touch on intraday basis 200 below 300 DMA. Even not just Nifty, small cap has also slipped in, though we did not give a closing. But what do this implies? There has been a free fall on that day. Many of the large caps, 90% of the large cap fell that day. Defensive pack is all, there's no escaping for even the defensive packs like FMCG. Is there, DAs have been continuously buying also, but FIs have been persistently selling. What do you see on the ground of technical front? Do you see that coming week there could be chances of a rebound? Do you find any crucial support levels on both Bank Nifty and Nifty?
So Priyanka, after a fall of two consecutive sessions, yesterday also we saw Nifty manage to defend its 200-day moving average. Although in an intraday basis, we saw a dip below the same, but on the closing basis, I think Nifty has given a good close and it has formed a doji kind of candlestick formation. Looks like there could be possibility of a dead cat bounce in the coming week. And today was perhaps a better day compared to the previous 4-5 sessions because the broader markets have outperformed. Nifty mid cap and small cap have snapped their 5 days of losing streak and formed a small body bullish candle. So that basically indicates that in the coming week we might see a relief rally across the board. And as far as Nifty is concerned, we are expecting a pullback towards 23,700, 23,800 levels. On the lower side now, till the time it doesn't close below 23,500, we have high probability of Nifty testing the levels of 23,800 and 24,000 kind of levels. On the other hand, Bank Nifty comparatively looking better. It is trading well above its 200-day moving average. And today as well, we have seen an outperformance from the Bank Nifty. I think we might see the next leg of pullback, which might be led by Bank Nifty towards 50,800 to 51,000. The support is at 49,800. So that should be the stop loss for the long position. And today, if you see, interestingly, the volatility index, India VIX, pulled off 4% and it is currently trading below 15. So 14.8 is a very much comfort zone for the bulls. So I think there has to be a strong pullback in the coming week.
Coming to you, Sudip, then, Sudip, yesterday I was talking to an analyst and he said that what the analysts are not really penciling in is the strength of the dollar index going ahead, the rise in the bond yields globally, and also the inflation that's on the rise. In fact, we got an upside surprise on the hotter than expected inflation print for Indian CPI. Are we still not out of the woods really, or is there more downside, more pain left?
Well, I think it's a very complicated situation there. I think with US having started reducing interest rates and the momentum in US is being there for further reduction, I think RBI will have to at some stage start naturally cutting interest rates in India also. Now the inflation going up, of course, is a deterrent, and we'll have to wait and watch and see the arrival of the next crop and where that takes the food inflation. Because I think what RBI will be more concerned about is the food inflation. And, hopefully that will start cooling off in the near future. And if it does, I think RBI will have to start cutting rates, keeping parity with US interest rates going down. Now, under the circumstances, I think there will be an interplay of a lot of factors which will determine where the dollar index will be. We'll have to wait and watch. But the fact remains that it's a tricky situation with US cutting rates and India not able to cut rates because of the high food inflation levels.
Taken 2 rate cuts and CPI at 14 months high. Of course, this makes it a little tricky for RBI governor. Sudip very well said that point. But we'll also come back to you to understand what are the key factors to look at now from here. But Nilesh, quickly one question to you. What we saw that there's a whole list of stocks which could be added in the FNO. 45 stocks which could be added coming month end. But then, in fact, this month end only, Jio, Zomato with the likes of Paytm. How much change do you think, how much inflows, the kind of move we've seen on Jio today, or for that matter, other counters which could be probables for FNO entrant, how many inflows, can come into these stocks majorly?
Well, Priyanka, it's very difficult to quantify that thing, but overall, I think it's more sort of positive development we might see going forward. So the names that you have just highlighted, Jio, Zomato, or DMart. So there could be possibility of some selling pressure if at all we see any pullback. Reason being, FNO gives you a good opportunity to short the stock. So that may have some negative impact, but I see more or less from a broader perspective, that's a positive move. And if at all we see inclusion of this stock, that will certainly have more addition in terms of the numbers. So that's certainly a positive from a long-term point of view.
All right, with that, it's time for a quick breather, but don't go anywhere because we are joined back by our guests, Sudip and Nilesh, both of them, who will be weighing in on the markets for the next week. Stay tuned, we'll be right back after a short break.
Welcome back. You're watching the weekly edition of Your Trades on ET Now, and we have Sudip as well as Nilesh to talk about the market move this week and what can we expect in the coming week. Sudip, coming to you, what I was thinking was, what are the next big triggers that market can take direction from? US elections are over. Fed has taken 2 rate cuts. CPI has come in at 14 months high. Lackluster earnings, all Nifty 50. With this week, we are done with all Nifty 50 earnings. What would be the next set of cues that we can eye on?
Well, as I was mentioning a little while earlier, I think one cue will come, and a strong cue at that will be the announcement of tariffs on China and other countries, including India, or the differentiated tariff on China by the new incoming administration in US. Now, if the Chinese tariff on Chinese products are significantly higher compared to what Indian products will enjoy, I think there will be bullishness amongst Indian companies who will see US as a significant market opportunity. If you listen to some of the commentaries of the management, which was coming in the recent past, I think pretty much many of them are hoping for a significant differential and a significant opportunity emerging in US market in the near future. Now, that's going to be a definite positive trigger. Now, apart from that, after relentless selling by FIIs, some pockets and some segments are looking oversold, and some amount of recovery at the near future is possible as and when the FII selling abates. The third factor is some of the companies have come up with management commentary which is reasonably bullish and positive going forward. Now that also will aid the market. Now I think combination of these factors should provide the next trigger for Indian markets.
All right, coming to you, Nilesh, then, quickly for next week, we have been hovering around, Nifty has been hovering around the 200 DMA. In fact, the fall this week also halted around those levels. Are we likely to maintain these levels, the 200 DMA, next week as well?
Absolutely. So I think, as I mentioned, after a steep fall that we saw in last 2 sessions, I think there has to be a strong pullback. We can call it as a dead cat bounce. That is something that we are expecting. And there are multiple reasons for that. First of all, Nifty has already given a decent correction towards its 200-day moving average. The RSI, if you see, it has gone into extremely oversold territory of 30. And historically, we have seen whenever RSI dips towards 30, we tend to see a strong rebound. So that kind of rebound is something that we are expecting when if you see India VIX, which is very much at corrected and comfort zone for the bulls. So overall, given this kind of a setup, there has to be a strong pullback. And today was a very good day where we have seen an outperformance in the broader market. A lot of stocks have taken support near about their respective 200 exponential moving average and witness a reversal candle. So going forward, we expect a stock-specific rebound as well as on index level. We are expecting a strong pullback.
So let's see. There are some pockets where you can probably find rebound also. This is what Sudip also indicated. But then Nilesh, in that case, what would be your recommended trades here for our viewers? 2 specific trades if you want to highlight.
Absolutely. So I have 2 by recommendation. First of all, if you see a majority of the stock today has given a strong reversal indication. So both the stocks are trading well above their respective 200 exponential moving average. First of all, Grasim, after a correction of past 6 consecutive sessions, today it has formed a bullish engulfing formation on the daily time frame chart. And given this kind of a setup, we expect a strong follow-up move to continue. And on the upside, as far as targets are concerned, 2610 is the level that we are expecting this stock to test, and the recent swing low of 2490 should be the stop loss for the long position. Apart from that, Piramal Enterprise, this stock is also trading well above its key moving averages, and it has also formed a triple bottom kind of formation near about 1000 level. So one can keep a stop loss below 1010 and go long in Piramal Enterprise for a pullback towards 1080 to 1100.
So much for those picks, Nilesh. But speaking of the picks, Sudip, I'll come to you. In fact, I've been hearing this a lot, that you don't weather the storm by staying invested in the market, you weather it by staying out of it. How does the retail investor really play this volatility? Is it time to be cautious and take some cash off the table to have some powder dry, because that is likely to benefit more? This is what I've been hearing, but what's your take coming in on this?
Well, not now. I think market has corrected significantly from its levels where it had reached. So exiting now probably will not be a wise thing. We believe that market is getting into a zone where some amount of recovery is bound to come. I don't know whether it will happen on Monday or Tuesday, but somewhere some amount of recovery will be seen. So exiting now will not be the right advice. But having said that, I think from a long term, if somebody has invested for long term and in good quality stocks, I don't think they should panic. India growth story is a secular one. There will be, these kind of sellings once in a while and dips once in a while. But if you are going to remain invested in the market for a long term, then I don't think you should get perturbed by these kind of, corrections once in a while. That's point number one. But of course, if you have stocks which are subpar and not appropriate, then wait for recovery and then exit. Keep your cash ready so that you can enter the right companies and the right sectors.
Nilesh, quickly, one more question to you. What we've seen is that, the kind of earnings which have, auto space has posted in line set of numbers, but FMCG was a sheer surprise. And, the kind of defensive pack we call it, and they've slumped it to their 4-month low, FMCG. Do you think that, if the recovery has to play, it will happen in, those packs which have fallen the most? Which sectors to eye on?
Well, Priyanka, I think FMCG has one more leg to go on the lower side. I don't see any immediate recovery in the FMCG space, given the kind of a setup we are witnessing in Nifty FMCG sector as a whole. Currently, it is at 55,900 levels, and target on the lower side comes somewhere around 55,500 to 55,200. So overall, within defensive, specifically FMCG, we are not that much bullish. I think recovery should come and led by banking and financials. So we are very much bullish on financials, specifically NBFC space, private sector bank, and a few names just want to highlight within private sector banks, ICICI Bank, Axis Bank, and also Kotak Mahindra Bank. These are the few heavyweights where we are very much bullish for a pullback. And within PSU banks, we believe that SBI can be accumulated at current level. And within NBFC space, counters like Chola Finance, which has fallen the most, and we are expecting a strong rebound out there. Not only Chola Finance, apart from that, Shriram Finance, LTF, these are the few other names. We have also highlighted Piramal Enterprise. So overall, financial as a whole, we expect a strong rebound. Cement pack, we are liking the most after such a sharp correction. And apart from that, Nifty IT index, if you see, it is a few points away from hitting a new record high. So we are also liking Nifty IT stocks, specifically large cap names like Infosys, TCS, SCL Tech, and Tech Mahindra. So these are few stocks and sectors where we are very much bullish, and we expect the next leg of rally, if at all we see in the market, should be led by these stocks and these sectors.
Thanks, Nilesh, for that. But coming to you, Sudip, then, when the dust settles, Sudip, they say that the differentiation of boys from men happens when the dust really settles. So when that happens, what are the sectors, what are the value pockets that you see on the market?
Well, my view is a little contrarian to the common wisdom. I believe FMCG is one segment where one should look at. India is the largest population India has, and FMCG companies are generally well managed, efficient companies. We have seen slowdown in urban demand, and they're suffering. But I think it's a matter of time before it picks up. I won't be surprised if Q3 with festive season shows that trend, and Q4 also should be good. So, efficient, well-managed FMCG companies having presence both across rural and urban India should definitely be looked at. I can talk about HUL, I can talk about Dabur, I can talk about Godrej Consumer with global exposures. I think these can be definitely looked at from a long-term pick, taking the advantage of the correction which these stocks have witnessed in the recent past. The other segment where I'm bullish from a medium to long term is technology. I think this sector will benefit significantly from the new US administration, which has will lead to significant expenditure and significant spending in technology by US. Now, many of the Indian IT companies are very well positioned with strong bases in US. Yeah, there may be some bit of a challenges as far as visa regime is concerned, but I think Indian IT companies have been efficiently managing those challenges in the recent past. So I would think that IT sector, particularly the large cap IT companies, definitely can be looked at. Valuation wise, also they are reasonably attractive.
Thanks very much, Sudip, for that view. Large cap IT is where you find the value in. Thank you so much, Nilesh, for giving your view on the technical front as well. But moving on, let's get your very key view. Stronger dollar has been one of the key headwinds for the emerging markets. But what's going to cap the upside on this ongoing greenback rally? Let's hear it. Let's hear a view from CLS's Lawrence Belanco.
Important level right now, 106 to 107. It's basically been the top end of the trading range that we've had since the late 2022 lows. And if I look at sentiment now for the dollar index is sitting at 83% bulls. That is towards the extended level where we've typically seen the upside momentum stall out at. So this is a key resistance zone that has capped the upside over the past 18 months. So we'd look for some hesitation here at least, but obviously running through, the new administration, there are headline risks where, some of the appointments could get you a break above that 107. So that's what we're watching quite closely. And obviously the negative for emerging markets is what we've seen over time is, a stronger dollar has been a headwind for the emerging market side. So for all emerging market investors, including fund managers investing in India, a break above 107 would be a further drag on the emerging market investment case.
All right, with that, it's curtains done in this edition of Your Trades. Priyanka and I will take your leave. Thank you so much for tuning in.